This is Scott Whitwam with your morning real estate investor update. And let's get to the top story today. N.A.R. releases resources related to class action settlement. The National Association of Realtors is acting proactively and has started releasing help guides for consumers related to the changes being implemented across the U.S. Even for investors, these changes related to how broker commissions are earned and disclosed will affect rentals and resale properties and how they're marketed throughout the MLS service. Whether you're a consumer or an investor, you should contact your realtor and request free resources, including a fact sheet related to practice changes. Other than disclosures and how transaction costs are identified in the settlement statement, the process will pretty much remain the same. It is very likely that there will be many questions and some confusion in the process. VA and FHA have already announced provisions in the lending program to support the changes to ensure borrowers are not excluded from purchasing opportunities related to these changes. Today's mortgage rate update. The Fed rate remains unchanged after the Federal Open Market Committee meeting July 30th and 31st. Even though there was great hopes that the Fed would begin to fulfill their prediction of rate cuts in 2024, it won't happen this month. According to the press release from the committee, they state, the committee does not expect it'll be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving substantially towards 2%. I say, don't hold your breath. Fed Chairman Jerome Powell, in the post-meeting press conference, indicated that they are open to potential of a rate cut in September, but will not commit to any rate cuts at this time as it relates to future periods. Basically, don't hold your breath. Consumer mortgage rates ticked down slightly this week in anticipation for a potential Fed announcement reducing their base rate. But without that, we may see the mortgage markets give back those reductions. In today's wrap-up, changes in the retail real estate sales process, the continued elevated mortgage interest rates, lingering high inflation, uncertainty to look into the real estate investing side of things make things look very turbulent. There is no one investing sector not affected by some challenges. Low inventory means fewer investor acquisitions. Declining sales means fewer opportunities to liquidate inventory. A rise in eviction numbers means landlords are facing increased costs from evictions and vacancy. So couple this with a traditional summer slowdown and investors should remain cautious. Take advantage of value opportunities and look for ways to mitigate risk and protect their downside. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.